markets. It's been very, very interesting. And so much so that international news contacted me. And thank you for being on my consultation team to prepare
Anytime.
for that interview. For the interview. So I was telling them in a previous video that when I have to prepare and I need investment perspectives, I call you, Candace, and Tila. You three are my go-to, and you all give me perspective, and it helps me to formulate my opinion. So thank you for being there for me so quickly on Monday. Appreciate you, bruh.
Anytime.
So what I explained every day of what happened starting from Monday, but it's funny how the conversation has shifted. The tone has shifted from Monday to today. And the market has been literally been a roller coaster. It has been down, up, and it's freaking everybody out. And so, based on the two interviews I did with Al Jazeera, is the world wants to know, is this craziness because of the U.S. China trade war, currency war? I call it the tariff testosterone fight that's going on. And I think a part of it is so. I think there's a lot of factors that are happening, including like what we talked about and what you sent me about Brexit and the fiasco that is Brexit right now,
Hmm.
and some other factors. But the uncertainty that's caused by this tariff fight is definitely having an effect. The uncertainty is what causing it. So what do you think is causing this roller coaster, this up down in the market right now?
Yeah, I mean it's really that fight, that back and forth. So anytime that a country proposes a tariff, it's basically an extra tax that one country has to pay, which really gets passed on to consumers like me. But when this happens, they go back and forth. It's kind of like playing chicken. If you've ever played where you're like running to see who flinches first. Well, when China devalued their currency, they went back the very next day and corrected it to a degree. So that's what kind of dropped the markets initially, and then they came back and said, well, maybe it's not as bad. And just people are going back and forth, or really countries are going back and forth. And because that
Mm.
uncertainty is there, that's why we have the roller coaster that we have.
Yeah, I agree with you on that. But when they did their reset, I think the Dow was already down 600
Right.
points at the time. I think when
Yeah.
I got the call, it was almost at 700. It was like 690 something. At the end
Hmm.
of the market, I think it was down 767 or something close to 800
Yeah.
points, right? And right before it closed, that's when China announced, that they were going under that. And it wasn't really a law. It was just a standard that they put that, or they said they wouldn't go seven when to a dollar.
Right.
So for those that don't understand what the devaluing means, can you explain to the viewers of what does that mean for a country to devalue their currency, and how does that affect, United States?
Yeah, if you've ever been to a foreign country, you can kind of understand how exchange rates work. For example, if you go to Belize, they have a rule or a standard where every one American dollar is two Belizean dollars. Really easy math. I
Right.
know if I have five American dollars, then it's going to be 10 Belizean dollars. Very, very simple math. Well, in
Mm-hmm.
China, it was 7 to 1 to every one US dollar. When they devalue their currency, that exchange rate gets thrown out of whack. And by devaluing it, they made their money cheaper, which made our money more expensive, which made our
Mm-hmm.
goods more expensive for the Chinese to buy. So if I am Apple, if I'm Nike, if I'm any country or any US country selling things to China and my things are more expensive, that's they're not going to buy it from China, or Chinese people aren't going to buy it. So that affects my sales. If my sales get
Mm-hmm.
affected, then it kind of cascades down from everything else. The
And
other
it
thing
makes their
is
products and services cheaper too. It makes it
correct,
cheaper, right?
correct. It makes their
So
products and
instead of
services
so
cheaper.
instead of me wanting to buy something from the United States, I'm going to buy it from China because it's cheaper.
Yeah, yeah,
So
and,
it's
and
it's almost
uh,
like you have two stores that sell the same thing, and we both promise that we're going to keep that sale or at the same price. You keep it at $1, but then I say, you know what, I'm going to make it 60 cents. And
Right.
so I have an unfair advantage in the market, even though we agreed to keep the price the same. So
Hmm.
now more people are going to buy from me because I'm cheaper now. And you could call me, you have the other business. You can say I'm cheating because that's not a part of the rules of the game, right?
Right. I mean, and it's just like anytime you go to a foreign country, some people love going to Mexico because the way the exchange rate works is that you can take $10 or $15 and feel rich. Well, China basically said we have a standard. You know what? We're going to lower it so our money can do more for us versus whatever the standard was. And when you
Hmm.
do that with billions and billions of dollars, that can throw off a business
Right.
and
And
really throw
that's
off the world markets in
throw
effect.
off the world market. So, and on Monday, and my stance was still the same, is that I don't think that they were manipulating the dollar. I do think that they were doing a chess move. I didn't think that they were going to hold it below that for a very long time because they
Hmm.
don't want to get the IMF involved. I think they did a
Right.
pawn move. That's why I say everybody has to learn how to play chess. If you know how to play chess, you can spot this a mile away because they were planning on certain things to happen,
Hmm.
and their pawn move actually gave them advantage because it picked, and it also helped the United States markets to rebound because we were positive. So
Hmm.
when we closed on Monday, it was a bloodbath.
Oh yeah.
Literally everything was red, right?
Right.
Monday morning, everybody was hoping everything would be down because there's no place to go but up if we're
Right.
down, and they were expecting it to be down, but everything started looking like trees. Everything
Yeah.
was green within that. What do you think was the reason why everything started rebounding so fast? Because it took all the analysts
People,
by surprise.
I think it's all temporary until the next thing happens, until the next tweet happens. It'll be different.
Yes.
Um, but like you said, it was a chess move. It's really a warning shot to say if we do
Mm-hmm.
this, this is how bad it will be for you and the rest of the
Exactly.
world. And we'll just go back and fix it today. But the next thing is
They
going
were
to happen. We're just waiting for it to happen.
they were showing their guns. They were like,
Yeah.
okay, I just need you to know that I can still fight in this war,
Right. And it's the
right?
one thing that the U.S. cannot do.
Right.
The government, president, Congress, they don't actually control the Federal Reserve. They are supposed to be independent, and they control what we can and can't do monetarily. So
Mm-hmm.
that's that's a that's a real good chess move to say I can do this and you can't,
Mm-hmm.
and these are the effects of changing something that isn't as flexible on your end.
Exactly. And the funny thing was is that when and I don't think the Treasury Secretary wanted to do this, but I think the president made him do this, is
Hmm.
to officially call China a currency manipulator,
Right.
pretty much a cheater, right? Because I think if they had done this this had prolonged a couple of days, we could see the intent was them to manipulate. This happened
Right.
in one day. They did a chess move. Trump didn't like it, want to call him a cheater, and they moved too quickly
Right.
because that gave China a chance to say, look, we just did it to correct what was happening. The markets are corrected. We don't have any plans to do it anymore, right?
Right.
So you don't need to call IMF. So I
Mhm.
think I just got a notification that I think their WAN closed at 7.013, which is still below what people expect it to be, but it's still
Mhm.
at 7%.
Right.
So China's like, you don't have to call IMF on us. Chill out, stop being a poor sport. And, we did what we had to do, just like you're trying to do what you had to do. Why do you think that, and a lot of people think that it's all of a sudden, but why do you think that Trump imposed the tariffs on China?
Uh, I don't know why he does anything. I really don't. I really don't. I mean, there have been some legitimate criticisms of how China does do business.
Hmm.
Some they do take intellectual properties from some companies. They do kind of copy a lot of the things that we have and kind of do things I would say in a sketchy manner.
Well, they're
So
trying to they're trying to be number one currency. So they're
right, right,
you know.
and that makes sense. There's also they're really trying to be the number one world power across the world. They're building
Right.
railroads from China all the way through to India, through to Europe. They're
Hmm.
doing a lot of really innovative things because they have a lot more control over their people than we do,
Right.
which is fine because we want that type of freedom.
Right.
So they're making some moves. I think that the way the U.S. government works now is that they're trying to prevent that in a way and trying to pass it off as they're doing X, Y, and Z, or they're manipulating currency. So I don't see a legit reason for the tariffs, but I think it's to slow China down and to prevent them from being a number one world power.
I also think that he did it to appease to his base. His base, from my understanding, are the middle class white men that had factory working jobs, industrial jobs, and a lot of businesses moved their plants or industrial jobs and purchased it from China because it was cheaper, right? Labor's
Mhm.
cheaper, products and services are cheaper to sell. So it closed down a lot of those industrial jobs because the United States was an industrial country. And so by taking those jobs away, now they don't have any jobs and we're giving them to China. And so from my understanding, if you put on these tariffs, it kind of forced a hand dry. They're going to pay us more taxes to infuse into our system, or countries, or we're going to have to find a way to do more business in the United States. I don't necessarily think that's going to happen
Well,
because, go
I was
ahead.
gonna say the problem is that like in theory that works and like in his theory that works, but the problem is like let's talk about his base, and I do think this is a cry to his base, like I told you I was going to go after China, I'm going to China.
Hmm.
However, who are the people who are most hurt by this? Farmers. U.S. farmers who are
Yes,
trying to sell soybeans, who are his
yes,
base, are being ruined and cleaned out and are asking
ruin.
welfare, basically, farmers' welfare, to cover the damage that they're seeing from the tariffs.
But
And
they
the other
all
thing,
he also required China to do agriculture, purchase agricultural products, soybeans and everything to help out the farmers. And China's like, kiss my ass. It's not going to
right?
happen.
Yeah,
You trying to tax me and you want me to purchase from you? No, dude, that's not going to happen. And that's
yeah,
why he got mad and wants to tax more.
right, right. But then the other problem too is the way that tariffs work is I think he thinks that China is paying the tariffs, and it's not
Right.
exactly how it works.
That's not how this
It's
works.
us. Yeah. So when
Mhm.
they sell something to us, we put an extra tax on it, and when taxes are put on items that we buy, we have to pay that extra.
Yeah, and so
So
what it is that it's the country that's doing it to all the businesses. The business pay for it, but the business are going to pass down those expenses. So they're either going
exactly.
to increase the cost of the expenses, or they're going to essentially they're going to increase the cost of the expenses.
Yeah.
I From what I've seen, I don't see that it's really going to have that big the extra $300 billion if if he does tax it. I don't think it's going to have that big of an impact on consumers. From the research I've done, some of the major players that sell products that require or that they do business outside for like electronic stuff, computers, parts for computers, cell phones, like Apple and all that, they have distribution centers in like South Korea or
Hmm.
some other country that's not in this whole fight, and they do the China business for their China consumers there. So I don't think that stuff like that is going to have a major impact, but I do believe that there are other products that we're not really knowing right now that we're going to, I know food is definitely going to be one of them that we're going to see increase. We're already seeing an increase of eating out and all that.
Yeah. I
Um,
mean, and there's always it's two sides to it. So there's the am I paying more for this good or service? Like you may not see that, but if you're an investor, you definitely saw an
You
impact from it.
definitely saw it.
Right,
So
right.
we have a couple friends that were posting that they've lost four figures to five figures just within a couple days.
Yeah,
Gains that they've gotten up till July, and then all of a sudden in one day, 2 days, they've lost half of it, which
right.
is crazy. And that's what I was saying is that for the average consumer, should you care? You should really understand what's going on. Is it really going to impact you? Maybe not as much as we think or thought it may, but if you are an investor and you tie your 401k, you tie your retirement savings or anything to these investments that are out there, um, it's really going to affect your money
Right,
that's out
right.
there.
This is anytime you're investing in anything, you have to pay attention to what is in this mutual fund, what is in this company, and what does this company do. Yes, Apple is a United States company. It's based out of California. However, the majority or a large part of their market is in China. They also manufacture things in China and in Korea and in Japan. And
Hmm.
when things happen in those countries, that will also affect it will directly affect the stock price here. Places like I think it was IBM, Micron, a lot of these tech giants have been affected
Hmm.
because they get their chips from that area, they sell to
Yep.
that area, and the minute that something happens there, you're going to feel in the stock market. So you have to do your research to see where is this company investing, is this company's, where are the customers for that company, because you have to be aware of all of those things at the same time.
Exactly. And for those of us, and I was talking earlier that investors, just like in my book, Four Financial Languages, there are four dominant languages, right? Saving, spending, investing, and giving. Investors speak a language very different because they use a specific jargon, big words, acronyms that the average saver, spender, and giver, we just don't get, right? We don't understand. We don't know what a mid chip, small chip, large chip, what the hell? I know what a bag of chips are, right? Or caps. I look, right? You don't call them chips, they're caps, right? What the hell is
Yeah,
a cap? What the hell is a bond? So and when this conversation is happening, a lot of them tune out because they don't understand. So they're like, well, it doesn't matter to me because I don't get it. But it's important that we translate this to to layman's terms of what's
right,
going on. And I'm so glad you're out there and Candace and Tila is out there to help to translate this conversation because even though I may be a spender, I need to understand a little bit about investing because I can't spend my way to wealth.
right,
I can't save my way to wealth, right?
right.
So there has to be an investment component within our language, within our portfolio, within what we do that gives us that return on investment.
Hmm.
Speaking of return, um, now that no one really knows what's going on. I think everybody, on Monday, one side of the world was saying the sky is falling, the other side of the world was saying chill the hell out. Just wait and see, right?
Right,
I was one of those that said, we got to wait and see. Nobody knows what the hell is going to happen. We're one tweet away from a trade war. We're
right.
one tweet away from a damn war, right? Because
Yeah.
the tweeter of the United States doesn't know how to shut the hell up. So we don't know what's going to happen at least until September to see if they even meet to come to a compromise
Hmm.
about the 25 billion, 250 billion, or the new 300
Hmm.
billion. For those that are currently they want to invest, but the market is so crazy right now. And when the market does go down, under normal circumstances, it's on sale, right? That's like a pair
Right.
of shoes that was $200, and now the price drops down to $150. It's relatively, and $130 is on sale, right? But this is kind of different because of the uncertainty that's in the air,
Hmm.
right? So, what would you recommend? Would you recommend people to, while everything is relatively low, to invest and what to invest in, or should we wait and see what's going to happen at least until September before we get into this boat?
Well, yeah, I'm not sure if just waiting in general is going to be the best solution. And the reason I say that is because wait until when? Wait until the next thing happens. Wait until Brexit happens. Wait until the end of the year. Wait until the
Right.
Christmas season. You could be waiting forever.
Wait until never. Yeah.
Yeah, yeah. I mean, it's August now. Like, I'll just wait until 2020.
Right.
So I think if we just say just wait for it, that can get convoluted. Like, what are we waiting for? Wait until the next
Mm-hmm.
election? Like, we never know. So I think that the most important thing is to really do the research into what you're looking for. So if you're someone who is buying a mutual fund or you're buying an index fund, which basically invest in hundreds, sometimes thousands of stocks at a time, you're going to be fine if you're looking at the long. Like, this is just a hiccup. You're going to own all the stocks anyway. You're probably going to be okay over the long term. If you're looking to buy an individual stock, let's say if it's Apple or Disney, you want to actually do your research to understand and see, is this stock actually cheap? for what it is, or
Hmm.
is it overvalued and expensive? And I want to wait until it comes down
Yeah.
because there are stocks like we saw with Uber and Lyft that are extremely expensive, but when they're not making any money, it's not actually worth the cost. So those are things that you want to see. What am I looking at? And for what I'm paying for this stock, does this make sense? And that's going to determine whether it's time for you to buy or whether it's time for you to sell or whether it's time to wait until it comes down to a price that makes sense.
Right. Okay. And so when he's talking about do your research, and for a lot of people that are not investors and don't really know how to research, right? So
Yeah,
if you want to, whether say you want to do a specific stock, so I have Nike stock. Nike's been doing relatively good considering where I bought it. So even though
right.
we've had its up and down, I'm in it for the long haul. So even if it has a really down week, month, or whatever, I'm not trying to do anything with it for a very long time. So
Mm-hmm.
what I did with Nike is I looked at the chart, their movement, right?
Mm-hmm.
And very simple. I need to see over, if I want to invest in 10 years, over their 10, 5, 10 years, whatever, which direction is the freaking graph going? If
Right.
it's going in an up direction, okay, I might want to do a little bit more research. Cool. That might be cool with me. If it's relatively keep going in a downward direction, that might not be the thing to do. For example, I also have Groupon. At the time, Groupon was going up, but for a long time, I think for a 2 year period, it wasn't really going up. It was heading down, down. It was going in the wrong freaking direction. All right. And so, and then I do a spot check. I don't watch it every day, but maybe every 6 months or a year, I'll look and see what's the direction of it going within that year. So if it keeps going in the wrong direction, I need to make a decision. But if it's, even though it's having its up and down highs and lows, if it's relatively going in an upward direction, I'm probably going to sit and stay. And that's what I do. Um, I start off with products that I use. So I look around, I do a scavenger hunt around my house. I look at the things that I use the most. And I look at those brands and try to see if it's owned by a publicly traded company. And if it's
Mm-hmm.
owned by a publicly traded company, then I want to see if they what their stock, whether on New York, New York Stock Exchange or whatever. And then that's when I look at their charts and see what direction's going, because I'm going to buy the product anyway. So if I'm going to buy the product anyway, I would prefer to buy a product from a company that I own,
Mm-hmm.
right? And that's a way for people to start. The other way is, like you said, with mutual funds to do that. A mutual fund is like a mall, right? And Kevin, tell me if I'm doing this wrong analogy, but the individual stocks called common stocks, they're like the individual stores, right? You have individual stores. And in the mall, there's a whole bunch of stores in the mall. And if you invest in a common stock like Nike, and then Nike closes its doors in that mall, you relatively lost money because that you were only invested in that one store. But if I invested in that mall, it has hundreds of stores in there. So even if Nike closed down, it's not going to affect me as negatively because there's other stores that are staying that may be doing a really good job, right? And
Mm-hmm.
so Candace, I think she calls hers like a cake. Like the cake has several different ingredients, right? But when you combine them all together, you can't really taste all the ingredients. It just makes a really good cake. But if you have an egg and you eat the egg, you can taste the egg.
Right.
That's a common stock. A
Yeah.
mutual fund is that cake that has them all mixed together.
Right.
And even still with the mutual fund, I still look and see what direction that it's going as well.
Yeah, so I take somewhat of a different approach. I do use charts to an extent, but I look at the money. That's the thing that I pay attention to,
Are they making money
because
or no? Hmm.
yeah, are they making money? Have they been doing so for a while, and are they actually growing? Are some of the questions that I ask. And the reason why is because I've looked at Groupon. So let's start here. Every company, what makes a company public, other than the fact that they offer stock on stock exchange, is that their financial statements are public. That means
Yes.
that you, me, and everybody can look at any public company and say, "Oh, really? You didn't make money this year. I'm leaving." Or you've been making money gradually, or you've been losing money your entire life.
Your
But
entire life.
with companies like with companies like Lyft and Uber
Lyft and
are the
Uber, you're absolutely right.
yeah.
They've
Now
been losing
they're
money
young.
their entire life.
Yeah, now they're young. They have time to fix that, and many companies like Amazon start off that way. But that's just not the point that I am personally going to invest in at that point.
Mhm.
So what I do is I look at companies that I may be into, but I also look at their competitors because let's say for Apple, I can look at Apple and say, your sales have been just stagnant. You're not growing. You've been losing sales of iPhones, but you're making more money in this area. I'm not really with that. I'm going to go and do something else. So I'll look at,
Mhm.
let's say for iPhone, competitors could be like an AT&T, Verizon. You could say that could be a Google, for example. And I start to compare those statements and see, and you can actually have a graph for, is this company making money? Are they gaining users? Or are they tailing off?
Mhm.
Then that's why I start to look at the chart to see if the stock price is reflecting that. Even if a stock is going down, but I see that they're consistently making more money, they're managing well, their debt is not growing and it's consistently going down, then I can say, for whatever reason, this is dipping, but I see that this company is growing. And whether the market sees this as an opportunity, I'm going to put my money here because I know the financials are solid. At the end of the day, every stock is going to be evaluated by how good the business is. There's no business that has failed or gone out of business when they still have money in the bank. But the
Right.
opposite is always true.
That's kind of the same thing with a consumer.
Mm-hmm.
I've never seen someone who's broke that had a lot of money in the bank. You know
Right.
what I mean?
Yeah.
So they may not spend a lot. They may not look like they have a lot of money, or whatever. But if they have a whole lot of money in the bank, they're never broke, right?
Yeah.
But I've seen a lot of broke people that look rich and ain't got nothing in the bank.
Yeah, and another example of why I tend to look at statements other than just blind charts is that let's go back, and this is real relevant because let's go back 2 years, right? Remember when Bitcoin was hot and Bitcoin was doing all these things, it was just shooting up. The chart just said just straight up,
Hmm.
right? Everybody went into it just because the numbers and the chart said that it was stuff. Now, Bitcoin is not a company. It doesn't have a CEO. It doesn't have revenue. It doesn't have debt. It's just an asset in and of itself. And we saw what happened after. However, McDonald's, boring, regular company, was up 80% that year. This was, I think, between 60 and 80% that year. You could see, first off, you can walk into a McDonald's. That's the first thing. You can see the sales. You knew that they were growing. When was the last time you've ever seen a McDonald's close? Like I've never seen that in my life. However, people went for the saucy, sexy thing and didn't actually look at the business fundamentals because it was not a business. And people just went for it, and now they're out of luck. If you stayed in it, you may have made some of your money back, but never what it once was. So that's something that you have to pay attention to as a business. What is this business doing? How is this business going for you? Because when you
Hmm.
invest in a stock, you're investing in a business.
What I found was interesting is the first part of the week when the Dow went down as much as it did, um, the Bitcoin, people were going to something safer, which in some cases they turned to Bitcoin and the precious metals. Gold went up, silver went up, so the precious metals. So people started reverting to that. They got scared of the market, and then the precious metals were going up, and even the Bitcoin was going up as well. And so a lot of the people on CNBC was asking a lot of the analysts, what are their thoughts about Bitcoin? And they said, you know what, there's not enough data to really, they wouldn't speak on it. They
Right.
weren't sold on Bitcoin, and they were like, there's not enough data for me to even formulate an opinion on
Mhm.
that. It's too soon. There's no regulation. We have no idea how that asset's going to operate or how it's going to work.
Yeah, there are a lot of rules on what may or may not happen. It could be a much more legitimate thing in the next 5 to 10 years, but that's not today. And until we have enough data to say what normally happens and what the mean is, what the normal is, that's what's going to determine how we act with that moving forward. We already know from 50, 60, 70 years of research that when people are afraid, they sell out of their stock and they go to gold and silver.
Yep.
That's been a fact. But the reason why that's normal and comfortable for us is because we've known that that's normal and comfortable for years and years now. We don't know that for Bitcoin, and it's going to be quite some time until it becomes more mainstream for us to accept that as an alternative currency or safety valve.
Yeah, I find it interesting. I'm not sold on Bitcoin right now because I don't even understand how to use it, right? And so if I don't understand how to use it, I'm even though it's a fresh new thing, I'm not too anxious to really invest in something like that. I have friends that live by, blockchains, Bitcoins, and all of that. They are miners. They get it. They understand it, and so they invest in it and they love it. And, that's just like with me and everybody else. If we don't understand what it is, we're not going to do it. And that's
Yeah,
why I'm so glad we're having this conversation, is so that we can break down the investment side, because a lot of people don't invest because they're scared. They don't
right,
understand. And if they don't understand, they're not going to do.
right.
And so even if we start small, start off with some apps, and I'll ask you about that. Yeah, let me ask you that about that now. So I have a few of my favorite apps that I like to use, for beginners, for medians, and for experts. Um, my beginner one, Acorns, start with $5, and that's what the ETFs, right? I love Robinhood. Robinhood, a lot. That's how I got my Nike stocks, and it allows me to do individual common stocks, or individual stocks. There's Stash, but there's also Stockpile that's out there as well. What are some of your favorite apps?
I mean, those are really those for investing are the really really good ones. I mean, you really mentioned all the ones I use. I would say for research and for understanding what's going on, I do like Yahoo Finance. It's something that's free, something that you can
Mm-hmm.
follow, and you get to make. It's really a watch list. I call it a wish list, and you
Yes,
can go through, hit the plus button in the top right hand corner for any stock that you're interested in. It'll start to send you articles. It'll send you updates on how that stock is doing, and
yes,
the good thing about that is that it gets you more acquainted, it gets you more familiar because when a stock drops, when the market drops, like you said, people are afraid. But if you understand why that's the case, you can make a better decision for yourself. If you're an
exactly.
Apple investor or a Walmart investor and you see that groceries are becoming more expensive because there's a tariff, I can say, oh, okay, well, maybe this thing will pass. I'm going to hold on to my stock. But if you don't know that, and you don't know anything about the trade war, and you don't know that groceries are becoming more expensive, and you don't know that people can't afford it, your stock drops and you panic. You jump
Yeah,
out when in reality it could be something very simple.
exactly. And I love that you said Yahoo Finance, because that's a part of I have a Droid. So I have a little slide thing that I can see, and my financials come from Yahoo Finance.
Yeah,
So
yeah,
I get my notifications on a regular basis when the stock opens, when it closes, in the middle of the day. And I love that, especially on the stocks that are on my wish list as well. To do that, even my cannabis, I'm not really into the cannabis yet, but I'm watching that side of it as well. So it does give you a lot of information. And it helps me to better understand, like you said, to be able to make a decision on if it's something that I really want to buy, or if I own it, if I want to stay. I think I'm invested in one, a marijuana company, and that was from years ago.
mhm,
And this was before they had the conversation of making it illegal. It was hints around it. So it was a couple cents. It was a couple cents. Now it's trading at a few dollars. So I'm staying in it, but Yahoo Finance has been my go-to, with that. CNBC, getting alerts from them, has
mhm.
been really good as well. What I would recommend for people, which I don't know how many people will do this, is to watch CNBC for at least 5 days in a row, or listen to it. The first 2 days, it's going to sound like Chinese. It's going to sound like Greek. It's going to sound like some other language. Everybody's talking about, all of this. You're going to hear all this jargon. You're not going to understand. But by the fifth day, you may not understand everything, but you're kind of going to understand a little bit of the language, right? And so when you understand and you start getting people's opinions, perspectives, and the conflict in that, and some similarities, it helps you to better understand the market and what's going on and how it's affecting all of these stocks and how these stocks affect consumers at the end of the day. So I think just listening to, or because I listen to CNBC going to my office every morning. But before I really wanted to, before I understood about the stock market and investing, I listened to CNBC. And it drove me crazy for the first 2 to 3 days because I didn't understand a word they were saying. But the more I listened to it, the more I understand and the more I learned. And the more I knew what kind of questions to ask.
Right.
You know
And
what I'm saying?
yeah, and what I would add to that, one of the things that I've learned is pick one. Pick one stock that you want to learn and become an expert in. And the reason why you want to do that is just like when you go and look for a car or you just bought that new car, you start to notice other versions of that car all of like everywhere you go. So you get a
Yes.
Chevy, you're like, oh, yeah, that's my car. And you start really paying
Right,
attention to
right.
it. Yeah. But when you do it with the stock, and it doesn't matter which one you pick, just pick one, learn more about it. When you start to watch CNBC and they say this stock is doing X, Y, and Z, you compare it to yours to say, okay, well, Apple is doing this. Well, how does mine compare to that? Or if McDonald's is doing this, how does mine compare to that? And you start to make those comparisons, and that's how you learn a lot more when you're watching a CNBC, when you're reading something from Yahoo Finance. So when you start to become just an expert, you don't have to know every single thing about that stock,
Right.
but pick
Hmm.
one, start to learn to get comfortable with that one, and you can start to take that experience and apply it to the next one, and the next one, and the next one.
That's awesome. And the other tip that I have is if you are working at a job and your job has a employer sponsor retirement savings plan, 401k, 403b, I would recommend whatever kind it is, if your company matches what your contribution is, you need to contribute something. Free money. Okay. Now, if they don't match, I mean, it's a great way to start putting money aside and all of that, and you can work with the administrative company that does it to get some financial advisement or whatever. It's a great beginning side of it to build up that side. But if they match you, I don't care if it's 50 cents on a dollar or whatever. That is free money. That accelerates your savings towards your investing, right? And then once you do that, definitely call and that's what we have. Most people don't understand that they have access to a free financial advisor. Most companies that they have an administrator of that employer employer sponsored retirement plan, and you can speak with a financial advisor at no cost, and they'll talk to you about what is your propensity of losing money. How scared are you going to get if you lose money? Which is called the risk tolerance. Help you to understand how much to put aside, whether it's 1% all the way up to 10%, whatever. How much does your employer match? You can do it up to that amount. But if you don't have that, and you maybe they don't have a program, or they're not matching, or you have an IRA outside, but you need some investment advice, I kind of recommend that you call Kevin. Not because I love him, not just because I love him so much, and he's such a brilliant man. He has an awesome website called Building Bread, and so he does. You do consulting, right? Because I'm about to send you customers right now. I'm just saying.
Yes, yes, I do consulting. If you run into someone or financial advisor, but you want to know, was it actually true and does it
Right,
work
right.
for you? I always do second look, second opinions, just to steer you in the right direction and to most importantly, educate you so that when you are sitting in front of a financial professional, that you are confident in what you want and what your goals are so that you can understand what you want versus them steering you in the wrong direction or selling you something that you don't need.
Absolutely, because and it's one of those things is, and I go with some of my clients. I actually will be on the phone call with them
Hmm.
or go to their meetings with them to translate. Sometimes I have to translate what the financial advisor is saying because they speak that jargon, or to help them clarify what do they want to get out of it, so they tell the financial advisor. Because it's just like going in to buy a car. I tell people all the time, when you go to buy a car, you don't allow the financial institution to tell you how much you can afford. You figure that out. If you
Right.
can afford a $300 car note, don't let you walk out with $450 card note.
Right. Right.
Don't do that. You do 300 out the door and let them find you a car and financing to get you $300 out the door. And so it's the same thing when talking with a financial advisor. You have to understand what you want your success to be, what you want it to be, and then how can they help you attain that. And once you get an idea and you have a plan for that, if it's something that's going to help you grow and be bigger that you can do, okay, great. But the first things first, you have to establish trust, build a relationship, and build some type of foundation. And that foundation needs to be what you want. If you don't know what you want, then I would recommend you definitely call Kevin.
Right.
That's just me.
Definitely. Yeah, because I can help you figure out basically everyone has a feeling on what they view their money to be or what they want it to be. We can take that, put it into a quantifiable measure. We can have investments that fit within that range. And you can say, this is the type of investor I am. I'm conservative. I'm more aggressive. But you're not going to have that language until you sit down and figure out how to translate that and how to change those emotions or find the right language and words for the emotions, the financial emotions that you may have.
Mm-hmm. Absolutely. Well, Kev, I know we've been on here for a while. I don't even know how long we've been on here, but it's been really fun. We're going to have this. We'll probably have to have this conversation next week. I'm curious to see what tomorrow's going to bring because
Right,
this week
right,
has been a doozy, boy. And it's just the first full week of August. You know,
right.
I thought August was going to be chill.
Nah,
Everybody's whatever.
nah.
Nah, dude, this is crazy. So we're gonna see what tomorrow brings and see what next Monday, next week brings. Might have to bring you back on and see what other drama unfolds. But thank you so much for joining me today. Thank you everyone for watching. Kevin and I just having a conversation on the craziness that's been happening for the week. We love you, and there's no way. Before I go, Kevin, how can people get in contact with you, man?
Yeah, you can find me on all things social media at Building Bread, or you can send me an email at info, at buildingbread.com.
Awesome. And you can definitely connect with me at Madam Money, MADAMMONEY.com. All social media at Ms. MS, MadamMoney.com. Looking to change that to Mrs., but still waiting for God to bless me on that. Maybe after all this fiasco in the global financial world stops, I don't know. But thank you so much for watching. Thanks, Kev, for making some time for me. I appreciate you.
Anytime. Thank you.
We love you, and there's nothing you can do about it.